Exercise 11-16. We're going to be working with unearned revenue. So remember, unearned revenue, when we get paid for something like a product or service, we're not going to provide that product or service yet. And because we have not provided it, we therefore owe that product or service. So unearned revenue is a liability until we have earned it. So in this exercise, notice it is October 1st here. And we sold a 6-month subscription starting November 1st. So that means we're not going to send our first edition, or our first issue, I should say, until a month later. So on October 1st, we're going to sell a 6-month subscription, but we're not going to give any issues yet. Therefore, we owe the whole amount on October 1st, so it's going to have to be a liability called unearned revenue. So to start the problem from the top here, we have Team Gaming completed the following transactions during 2025. Generalize the transactions, explanations are not required, round to the nearest dollar. Record debits first, then credits, exclude explanations from journal entries. So back to our problem here for this first part here on October 1st, since we sold those 6-month subscriptions starting November 1st and we collected cash of $330. Remember, cash is an asset, so it is going to be going up with a debit. We're going to list that cash first. That we're going to skip the amount here because you'll see we're collecting the cash of $130 plus the sales tax of 9%. So that cash amount, we are going to have to add the unearned revenue and sales tax payable. So those will be our other two accounts here. So we have unearned revenue. So on October 1st, how much of this $330 have we earned? None. So this will all be in the unearned revenue. So we'll credit that to increase unearned revenue, since unearned revenue is a liability. And then we have sales tax payable to deal with here. So 330, we can pop open our handy calculator at the bottom here, or use your own. So we have 330 multiplied by 9%. So we can do times 9%, key. So $29.70. And since we do need to round to the nearest dollar, that $29.70 is going to become $30. And you'll see, again, it says here round to the nearest dollar. So we have 30 as a credit to tax payable in order to increase that liability there. And then we're going to go ahead and add these through to balance the transaction. So $330 plus $30 equals $360. And that's going to be a debit on the cash, since we are increasing cash, since we collected the cash of $330 plus the sales tax of 9%. So we can go ahead and check our answer. Fantastic. Okay, moving on here. Then on November 15th, we paid the sales tax to the state of Tennessee. So again, remitted is just a fancy word for paid. So we paid that sales tax that we accrued right up here for $30 as a credit. So in order to remove that, we are going to need to debit it here out of the liabilities, since we are taking it out now. So we'll go ahead and input sales tax payable, and we'll remove it there. And then since we are paying it, cash is going to be the other account. So we will be decreasing cash, which is a credit here, since cash is an asset. And then we'll go ahead and check our answer. Excellent. So here now is where it gets a little bit more complicated. On December 31st, we made the necessary adjustment at year end to record the amount of subscription revenue earned during the year. So let's go back up here to October. So back here in October, we sold 6 a 6-month subscription, but we're not going to sell those or send those issues until November 1st. So on October 1st, we owed all 6 issues. And then on November 1st, we send out 1 issue. So we've earned 1 issue in November. And then in December 1st, we send out another issue. So from October to the end of December, we've sent out 2 issues. So we have earned 2 issues out of the 6. So let's figure out what that amount is then. So we'll go ahead and pop open our calculator. And so 330, we're going to divide it by the 6-month subscription. So for each of the 6 issues, that amount is $55. But since we are then calculating it for the 2 months that we sent issues for November and December, we can go ahead and multiply this number by 2. And that is $110. Since that is what we have earned. So to lower this liability called unearned revenue, we have to lower it by 2 issues worth of that unearned revenue. So we're going to go ahead and scroll back down. And unearned revenue again is a liability. So in order to decrease that liability, we go ahead and have to debit unearned revenue. So that is on the left side. So that's for $110. And then because we have earned $110 of that subscription revenue, we now have to record the revenue. So I'm going to go ahead and credit the subscription revenue account here. And then revenue does increase here with a credit. So we'll go ahead and balance this transaction with a credit of $110 since that is what we have earned at the end of the year. And then let's go ahead and check our answer. Well done.